Hi everyone, we are going to start our live class by 6 o'clock. So let us wait for everyone. We are going to start our live class by 6 o'clock. So let us wait for everyone. Yeah, good evening, ma. Yeah, so many have come. Good evening, all students. So we will wait for 2-3 minutes and I'll start the class. Good evening, all, ma. Okay, let me start the class then. Hope all have come. Okay, let me start the class. Actually, this is a continuation of previous live related to income from house property. So, I discussed in the previous class income from house property and how actually we are going to deal with the problems and how actually we are going to calculate income from house property of an individual person. So, now let us discuss same thing but different problems. I discussed in the previous live 3 problems and its solutions, and here we are going to discuss today continuation and remaining problems. Let us discuss all this now. Actually, if you want to calculate income from house property of any assessee, so you should know the format of calculating as per Indian Income Tax Act 1961. So there is a format for that. Hope voice is good for everyone. Can you listen? Is it clear? Okay, hope this is clear. Okay, so let me continue the topic. So here, actually, whenever we want to calculate income from house property of any assessee, we should calculate as per Indian Income Tax Act 1961. So there is a format for that. Okay, so first of all, according to our Indian Income Tax Act, house property is divided into 2 houses. One is let out house and second one is self-occupied house. Okay, so there are 2 houses that we are going to calculate income from house property. One is let out house and the second one is a self-occupied house. Okay, so as is shown here on the screen, so 2 houses are there for the assessee. So we are going to learn the rules regarding let out house as well as self-occupied house. But I started let out house problems. Let out house means if the assessee is having own house. He is the owner of one house and he is giving that house on rental basis to tenant. Then we can call it as let out house. So in case of let out house, every month he receives rent from the tenant and he gets some income every month. So that income will be coming under tax category. So what actually he is getting out of that rent for 1 year, that will be calculated and tax will be imposed by the income tax department. Okay, so here we are going to learn how to calculate problems under let out house. Already in the previous live class I discussed a few problems under let out house, but now we are going to do under let out house and there is some there are some other rules to discuss here in these problems. Okay, so if you want to do any let out house problems, first of all you should know the format. Okay, here I will show the format, then we will go to problems. So this is a format that we are going to follow whenever we actually calculate the let out house property income. Okay, so here on the top we should give the heading. For every problem heading is compulsory. What heading we are going to give? Computation of income from house property of Mr. Name of the assessee will be recorded there for the assessment year 2024 and 25. Now present assessment year is 2024 and 25. Okay, so we are going to calculate house property income for that particular assessment year, and we have to draw columns particulars amount. Okay, And here under particulars we are going to record gross annual value first. Gross annual value short form is GAV, and amount we are going to record in the amount column, but gross annual value GAV will not be given in the question. We have to calculate the gross annual value. So that gross annual value will be calculated by using one method, and there are 3 steps for that. I will show those. So this is actually how we are going to calculate the gross annual value. So under 3 different steps we are going to calculate the gross annual value. Okay. So step 1, step 2 and step 3. 3 steps are there. So there are 3 steps under which we are going to calculate the gross annual value. Step 1, step 2 and step 3. There are 3 steps here. Okay. So under these 3 steps we are going to calculate the gross annual value, and we will get gross annual value at the last step. Okay. So this is the actually these are actually different steps that we are going to follow for calculation of gross annual value. So whatever gross annual value we get here last, okay, here we get the gross annual value. So after getting this gross annual value, this value we are going to take in the format at the first place. Okay. So let us go to our format, and here we will put the amount whatever we get in calculation, okay, for GAV, and after that we deduct municipal taxes. So these municipal taxes are available in the question. Next, if we deduct these municipal taxes from gross annual value, we get one value that is known as net annual value. Okay, we can call net annual value as NAV. And next, deductions we give under section 24. Whenever we actually do income from house property for let out house, after getting net annual value, we give some deductions under section 24. So here we give deductions under section 24, and here as per Indian Income Tax Act, there are 2 deductions. One is standard deduction under section 24 subsection A, and second one is interest on loan under section 24 subsection B. Okay, so this deduction will be given here, and if we deduct these 2 values, then we will get one value that is known as income from house property. So in this way we get the income from house property. We should follow all the rules and regulations here, and whatever actually are mentioned under Indian Income Tax Act, then we can calculate income from house property of let out house. This is a format what I discussed in the previous live class also. Now we will go to our question as well as we will discuss the solution for that. Let us go and discuss the solution. Okay. Let us go to our question. I will show one question here. Good evening, ma. Good evening, everyone. So this is our question. Today we are going to discuss this question, and we are going to do solution for this particular question. So let me discuss the question. First of all, understanding the question is very important. If we understand the question, then we can do the solution easily. Let us discuss the question so that you will understand it in a better way. Here on 1-4-2023, so on this date, on 1-4-2023, Mr. Manohar is one assessee. Assessee name is Manohar. Manohar purchased a house in Hyderabad. Okay, he purchased, Mr. Manohar is assessee, he purchased a house in Hyderabad. For what purpose? For residential purpose. So for staying. Okay, residential purpose means to stay in the house. So he purchased house for how many rupees? 23 lakhs. 23 lakhs is a purchasing price of the house. For this, he took a loan at the rate of 10%. So he purchased house for 23 lakhs, but he took one loan from the bank. And what is the interest that he is paying? 10% interest. So he is paying 10% interest on the loan of 23 lakhs rupees. Okay, this is what interest on loan that he took for purchasing the house. This actually interest on loan 10% is eligible for the deduction under section 24 subsection B. Okay, so we will calculate it later. Next, where actually he took the loan from? Central Bank of India. He may take loan from any bank. Every loan is and its interest is eligible for deduction under section 24B. So what is the loan amount? 23 lakhs. Interest percentage is 10%. On 23 lakhs, if we calculate 10% interest, we get interest on loan. That amount we are going to give as deduction. So let us calculate. Okay, let us calculate it in the working note solution part. Okay, this is a solution part. Let us calculate it. Interest on loan. Interest on loan, how much actually? That is 10% on 23 lakhs. Okay, so I am calculating directly. 23 lakhs is a loan amount. Okay, on 23 lakhs, what is the interest percentage? 10%, 10 by 100. So how much we will get? That should be recorded here. 23 lakhs. You can calculate. You also can calculate, students, so that you can continue along with me. You will understand it clearly. So 23 lakhs into 10 by 100. You can do it. And if you want, you can place the answer in the comment box. 23 lakhs into 10 by 100. How much we will get? Anyone? Lakhs 30,000. Okay. So, yeah. Amir Khan, good. So he mentioned in the comment box. 23 lakhs into 10 by 100. It is 2 lakhs 30,000. Okay. So this is what actually, this is interest on loan. And this we can give as reduction under section 24 subsection B. Okay. So keep it here. And next, let us go to our question and let us read it. So this amount we are going to give deduction under section 24B. If you want, you can mention here under section 24B. Okay. So we will allow it later and let us go to our question. Let us read the question. Where we stopped, that regarding loan, we discussed regarding loan, that is 10% from Central Bank of India, and later which has been let out to Mr. K.R. Reddy. So this house is let out to one person and tenant name is K.R. Reddy on a monthly rent of 20,000. So what is the monthly rent that our assessee is collecting from that person? 20,000 per month. So every month he is collecting 20,000 rupees. Okay. Let us complete the question. Then we will go to our solution box and we will record information. So 20,000 is a monthly rent that he is collecting. Okay. And next, the house was occupied. The house was occupied throughout the year. So that person, tenant, occupied the house full 1 year. The municipal valuation means MRV ma. Municipal valuation means MRV, municipal rental value. Remember that point. Municipal valuation is nothing but MRV, municipal rental value, is rupees 1,20,000. This is how much? 1,20,000. Okay. If they mention amount, if they don't mention for 1 month or monthly, then we have to assume that that is for full 1 year. So municipal valuation is 1,20,000, that is for full 1 year. Okay, and we have to take MRV, SRV, ARV, FRV, these are all for full 1 year only, 12 months period, 1 year period. So 1,20,000 is a MRV. We can take MRV as 1,20,000. Hope this is clear for everyone. So ARV is available in the question, that is 20,000 per month, and MRV is 1,20,000. Next, municipal taxes. Municipal taxes are 10%. Municipal taxes also we give as deduction, where from GAV, from gross annual value, we deduct municipal taxes, that is 10%. Whenever percentage is mentioned for municipal taxes, that percentage should be calculated on MRV always. Okay, so municipal taxes always we have to calculate on municipal rental value. So municipal rental value is 1,20,000. So we have to calculate 10% on that. We will get municipal taxes. Next, standard rent. Standard rent means standard rental value. Standard rent is 1,50,000. Standard rental value also is available. Till now what we got? We came to collect an actual rental value, ARV, MRV, municipal rental value. Now SRV, standard rental value. These three are available till now. Next, Mr. K.R. Reddy could have obtained a similar house at a rent of 14,000 per month. So here Mr. Reddy, okay, he can, what they are saying, Mr. Reddy, K.R. Reddy can get a similar house at a rent of what? 14,000 per month. So similar house rent is not nothing but it is FRV, fair rental value. So fair rental value is 14,000 per month. We can take 14,000 per month for fair rental value. During the year, Mr. K.R. Reddy did not pay the rent for the month of March. So Mr. K.R. Reddy did not pay 1 month rent. This is what we have to concentrate here. Okay. Today what problems I am going to discuss are related to some one month rent or 2 months rent that our assessees did not receive actually. So how to deal with that? That we are going to discuss in these 2 problems today. Today I will discuss with you 2 problems in this live class. So here in these 2 problems we are going to concentrate on a topic that the house actually have given on rental basis, but tenant did not pay either 1 month or 2 month rent. So assessee did not receive that rent. Okay, we are going to focus on that point today in these problems. So let us continue that. So Mr. K.R. Reddy did not pay how many months rent? He did not pay month, which month rent? March month rent. 1 month rent he did not pay. Okay, and vacated the house. So he did not pay 1 month rent, and actually he vacated the house. Okay, so here in our during previous year 12 months are there. Last month is March. Okay, so in the month of March tenant did not pay rent. That is why he vacated the house. And here 1 month rent our assessee did not receive. So how many months rent he received? Only 11 months rent. Later on he vacated, tenant vacated the house. We are going to calculate income from house property, but here we are going to consider one point, that 1 month rent our assessee did not receive. Okay, so keep that point in your mind, and here they asked to compute income from house property. Let us go and record all the details whatever we actually discussed here. We collected annual actual rental value, MRV, FRV, SRV, and municipal taxes 10% as 10% are given. And next 1 month rent, March month rent our assessee did not receive. This is what we came to know. Let us go and record all those. Here we will record all those. So first we will write ARV. ARV is how much here? ARV is, I will show once again. You can see here. What is ARV? 20,000. You can see in the fourth line, Mr. K.R. Reddy on a monthly rent of 20,000. So he has actually, which the house was let out to Mr. K.R. Reddy on a monthly rent of 20,000 rupees. So monthly rent is 20,000. Monthly rent means actual rental value. Okay, 20,000 rupees into how many months rent actually he received. 12 months are there during 1 year period, but March month rent our assessee did not receive. So how many months rent actually he received? Only 11 months rent. Later on the tenant vacated the house. Last month is March month, till February he received, and our previous year is what? 1st April 2023 to 31st March 2024. That is our previous year. And in the last month of the previous year, March month, rent he did not pay, tenant did not pay, and he vacated the house. So our assessee received only 11 months rent. Okay, hope this point is clear for everyone. So 20,000 into 11. You do 20,000 into 11. So how much rent we get here? 20,000 into 11. We get 2,20,000. 2,20,000 rent only our assessee received. Okay, for 1 year. That is actual rental value. That is ARV. Hope this is clear for everyone. Next, we will write municipal rental value, MRV. Municipal rental value short form is MRV. Let us take that from question. So here MRV is how much? You can see here. Fifth line. Okay, you can see here. I am highlighting. Okay, here. The municipal valuation is how much? Municipal valuation is 1,20,000. Municipal valuation is 1,20,000. They did not mention per month or anything else. Okay, then we have to take it as it is for 1 year. If they don't mention whether it is for 1 year or for 1 month, we can take it as that it is for 1 year. So 1,20,000 municipal valuation, that is MRV, is for full 1 year. And let us take, again we should not multiply that by 12. So let us take 1,20,000. That is MRV for full 1 year. Always ARV, MRV, SRV, these all should be taken for 1 year. Okay, so MRV is 1,20,000. Let us go to our question and let us see again. And what else they have given here? Standard rent. Standard rent is how much here? Standard rent is 1,50,000. Okay, and here again we can observe one point. They did not mention whether it is for 1 month or for 1 year. So we can assume that it is for 1 year, and we should not multiply again this 1,50,000 by 12. We have to take 1,50,000 only by assuming that this is for full 1 year. Let us take that. SRV. SRV means standard rental value. That is how much? 1,50,000. Next, after this, Mr. K.R. Reddy could obtain a similar house at a rent of 14,000 per month. So similar house rent means fair rental value. Similar house rent means always this is fair rental value. Fair rental value is how much? 14,000 per month. So 14,000 for 1 month. We should take it for 12 months. 14,000 into 12. Let us go and do that calculation in our solution box. So this is what FRV. FRV means fair rental value. How much it is? It is 14,000 for 1 month, but we should take it for full 1 year. So into 12 is equal to how much we will get? 14,000 into 12. That is 1,68,000. Okay. So this is FRV. And whatever we need for calculation of GAV, all 4 items we took here. And let us see the question. What else they have given in the question? Here they have given that municipal taxes. How much municipal taxes are? 10%. Okay, so municipal taxes information also we will take in the solution box. You can take here municipal taxes. How much percentage? It is 10%. We can calculate that. We have to calculate that on MRV. Always municipal taxes we should calculate on MRV. So what is the MRV value? MRV value is 1,20,000. We will calculate on MRV 1,20,000. How much percentage? 10%. So let us see here 1,20,000 into 10 by 100. How much we will get? 12,000. So 12,000 are municipal taxes. Okay, and there is one rule for municipal taxes. If it is paid, then only we will give as deduction in the statement. If it is not paid, don't give as deduction. If nothing is mentioned in the question, we can assume that it is paid off, so that we can give deduction. Okay, yeah, good. 12,000. Amir Khan have given the answer. Very good, ma. Yeah, I observed your answer in the comment box. Very good. Yeah, I've seen that. Okay, and completely whatever they mentioned in the question, we took it. Now let us go and let us do the solution. Let us calculate income from house property. So this is a solution. Solution starts from here onwards. Okay, so we have taken information what actually we need for solving the problem. Okay, and whatever we require to locate in the calculation of income from house property, everything we took here from the question. By discussing the question, let us go and do the solution. Okay, I will show once. This is our question. By discussing the question, we have recorded this. Okay, and next we are going to record everything in the format, and we are going to calculate income from house property here. Yeah, Chintu Chari. Yeah, I've seen your answer also. Good, ma. And let us go and calculate this. This is what? This is a let out house, students. Okay, this is a let out house. And on the top, always you have to mention the heading. What heading you have to record here? Computation of income from house property. Always same thing, because we are calculating what? Income from house property. Computation of income from house property of Mr. Name of the assessee should be recorded there in the dash. So what is the name of the assessee in our question? He is Mr. Manohar. What is the name of that person? Manohar. So we are going to calculate income from house property of our assessee whose name is Manohar. Let us record that in the statement on the top. Okay. So here I will write name of the assessee, Mr. Manohar. For the assessment year 2024-25. Okay, this is a heading that we should give always. And in every problem we are going to change the name of the assessee there. That's it. And heading always is same in case of house property. And we have to draw columns, particulars, amount. And same format we are going to follow for every problem. But values are going to record whatever actually are mentioned in our question. So now first one is gross annual value. What is the first one? Gross annual value. So we should record gross annual value amount in the amount column. But will they give in the question? They don't give. Do they give in the question? No. We are going to calculate gross annual value. So how to calculate gross annual value? I already have shown it. Okay, in the beginning of the class I discussed, in the previous live class also I discussed. There are few steps to calculate gross annual value. Let us discuss what actually the steps for calculation of gross annual value. Let us go and discuss that. So, good evening Alma. Yeah, I had tea. So good evening all. So let us go to discussion. Let us calculate gross annual value. So these are the steps that we should follow for calculation of gross annual value, students. So total 3 steps are there. In 3 steps we are going to calculate the gross annual value. First step is higher of the following two is taken as ERV. Okay, this is the first step. So higher of the following two is taken as ERV. So under that there are two items. Whatever is the highest one, that will be taken as ERV. ERV means expected rental value. Okay, ERV means expected rental value. And in the first step we are going to calculate only ERV, and highest one we should take. Let us see what actually are the two items. First one is what? Municipal rental value. Municipal rental value short form is MRV. Let me write short form here. MRV. Okay. So what is MRV in our question? Let us go back and check. It is MRV. You can see here. MRV is how much? 1,20,000. So let us go to our format and let us record there in the place of MRV 1,20,000. Okay, let us go to first step and record there 1,20,000. Always MRV, FRV, SRV, ARV. This should be taken for 1 year. 1,20,000 I recorded. Next is second one. Second item. What is the second item here? Second item is fair rental value. So fair rental value short form is FRV. Let us record short form of that is FRV. Okay. Let us take that value here. Already we took in the solution box. See what is FRV. FRV actually they have given 14,000 for 1 month, and we should calculate it for 12 months. So we did into 12. So we actually got it as 1,68,000. Let us take that in our step, in our calculation. So FRV is 1,68,000. Now out of these two, which one you have to take? You have to take the highest one. They mentioned clearly in step 1. Which one you have to take? Higher of the following two is taken as ERV. So we have to take highest one. Okay. So what is the highest one out of these two? Highest one is 1,68,000. 1,68,000 is more than 1,20,000. So we should select that one and we should name it as expected rental value. So here what you have to do is, whenever you do in your notes, you have to circle that. Whatever you select, that should be circled. Okay, 1,68,000. You have to actually circle. You have to make a circle around it. You draw one circle around 1,68,000. Here I am changing the color of that. Okay, so that it will be visible clearly. So I selected 1,68,000 because 1,68,000 is highest one out of these two, and we have to name it as what? Expected rental value. Higher of the following two is taken as ERV. So higher of these two will be taken as expected rental value. Short form of expected rental value is ERV. And it is how much? 1,68,000. Okay. So first step finished. And we have to go to second step. Second step actually I already told. Second step we will do only in case if we are going to deal with the standard rental value. If standard rental value is given in the question, then only we are going to take the second step. Otherwise we don't go to second step. Okay, hope this is clear for everyone. If if standard rental value is given in the question, then only we go to this one. Otherwise we don't go to second step. Okay, second step will not be required if standard rental value is not given. But in our question, did they give standard rental value or not? Yes, they gave standard rental value. So we need to do second step also. Let us see whether they have given standard rental value or not. You can see here I already mentioned SRV. We took it from question, no? SRV means standard rental value. How much they gave in the question? 1,50,000. So we can take standard rental value 1,50,000. Okay, that is for 1 year. It is given. Standard rental value is there in the question. So we need to do step 2. If standard rental value is not given in the question, don't do step 2. You can go to step 3. After step 1, you can go to step 3. Okay. If standard rental value is given, you have to do step 2 also. Now in this problem, we need to do step 2 also. And what is step 2? Least of the following two is taken as adjusted ERV. So under that there are two items. Least of that we have to take as what? Adjusted ERV. So what are those two here? First one is expected rental value. Expected rental value short form is ERV. Okay. So ERV. And this is what actually do we have in the question? We don't have in the question. This is the answer what we found out in step 1. You see step 1. So in step 1, what is the answer that we got? That is expected rental value ERV 1,68,000. That we should record in the first place of second step. Hope this is clear for everyone. Let us go to first item. In the second step, how much we are going to write? 1,68,000. Okay. And next, second item is standard rental value. Standard rental value short form is SRV. SRV is a short form of standard rental value. That is available in the question. We can see from, we can take from question. SRV, you can see here. It is how much? 1,50,000. So we can take SRV 1,50,000. Let us go to our step and record here 1,50,000. And out of these two values, we are going to record what? We are going to take only the least one. We are going to take the least one. Okay, out of these two. So what is this least one here? Which one is the least here? ERV is 1,68,000 and SRV is 1,50,000. Okay. So which is the least one here? 1,50,000 is the least one. Let us select that. How you are going to select? Just by drawing a circle. But here I am selecting by changing the color. I am changing the color. Okay, 1,50,000 I selected. So we can name it as what? Adjusted ERV. 1,50,000 is adjusted ERV. And second step also finished. Let us go to third step. What is third step here? Third step is higher of the following two is taken as GAV. So highest one, we have to take it as what? GAV, gross annual value. This is what actually we require. Okay. So for that only we are doing all these steps to find out what gross annual value. This gross annual value we get in the third step. So here what actually we are going to do? In the first step, in the third step, higher one we are going to take. But in the second step we are going to take least one. Okay. So now higher of the following two is taken as GAV. What are those two? First one is adjusted ERV. Always first one will be the answer of second step. Okay, adjusted ERV. We actually ascertained here in the previous step. You can see that. Okay, how much it is? 1,50,000. So you can take here 1,50,000. And next, actual rental value. Actual rental value means ARV. ARV. ARV actually 12 months period ARV we should take, but assessor did not receive March month rent. 1 month rent he did not receive out of 12 months. Only 11 months rent he received. That only we will take. Already we calculated and we recorded here. You can see that ARV, first item. Okay, ARV is how much? 20,000 into 11, 2,20,000. Let us take that 2,20,000 here in our calculation. Okay. So now you have to select the highest one out of these two. Which is highest one here? 2,20,000 is the highest one. So 2,20,000 you are going to select it and you are going to name it as gross annual value. So you have to select by drawing a circle around 2,20,000, but I am changing the color of that. So 2,20,000 is what? Gross annual value. Gross annual value short form is GAV. How much it is? 2,20,000, because highest one we selected. So GAV is 2,20,000. Hope this is clear for everyone. Let us go and record in our statement. So go to statement. First item is gross annual value. How much we are going to write? It is 2,20,000. Hope this is clear. We calculated gross. Always you have to calculate gross annual value, students. We calculated, and how much we actually ascertained? It is 2,20,000, and we took here. Next one is municipal taxes. Municipal taxes. One rule is there for municipal taxes. If municipal taxes are paid, then only you give us deduction. If it is due, don't give us deduction. If half is paid, half is due. Paid half only you give us deduction. Okay. So here in our problem nothing is mentioned whether they paid or due. Then we can assume that it is paid off and we can give deduction completely. So how much municipal taxes we have? That is municipal taxes. Here you can see that is 10% students. They have given 10% only. They did not give amount. If they give amount, you can take amount directly. If they give percentage, you should calculate that percentage. So on what you have to calculate percentage? On municipal variation, on MRV. Always municipal taxes should be calculated on MRV. So MRV is 1,20,000 into 10 by 100. We calculated it as 12,000. So municipal taxes are 12,000. Let us go and record here in this place. 12,000. And 12,000 you have to deduct from 2,20,000. How much we get? 2,20,000 minus 12,000. So it is how much, students? It is 2,08,000. I will record here 2,08,000. Okay. So next, after this, what we have to do? We have to name 2,08,000. So always what name we are going to give for that? Net annual value. Short form is NAV. NAV means net annual value. This is the answer, not answer. The amount whatever we get here, that should be named as net annual value. So 2,08,000 is known as net annual value, NAV. So under this we are going to give some deductions under section 24. So how many deductions are there? 2 deductions. First one is standard deduction under section 24A. Standard deduction also is known as statutory deduction. It is how much percentage? Always 30% on NAV. So whatever NAV we get here, on that we should calculate 30%. Then we get standard deduction. So here let us calculate it. I calculate it. How much it is? 30% on NAV. What is our NAV here? 2,08,000. 2,08,000 into 30 by 100. So how much we will get? 62,400. Okay. So that is standard deduction. Let us record that. The amount column 62,400. Okay, hope this is clear for everyone. Next one is interest on loan under section 24B. So interest on loan, this is allowed as deduction even it is paid or due. If it is given, we will give as deduction. If it is given in the question, we will allow it as deduction. So how much actually we have in the question? We already recorded in the solution box. Interest on loan is how much? 10% they gave. And what is the loan amount? 2,30,000. Sorry, 23 lakhs. 23 lakhs into 10 by 100, 2,30,000 interest on loan we actually calculated. Let us take that. 2,30,000. Okay. And now what we have to do? We have to calculate it. Okay. So here if you observe NAV, net annual value is 2,08,000, and these two deductions. First deduction is what? Standard deduction, that is 62,400, plus interest on loan is how much? 2,30,000, and two deductions total amount is 2,92,400. So here we can observe that 2,92,400 is more than NAV. NAV is less and the deductions amount is more. Then here we can deduct 2,08,000 from 2,92,400, but the amount whatever we get as answer, that is not income, that is loss from house property, because we are getting negative amount. 2,08,000 minus 2,92,400. Okay, if we deduct, we will get some value. What value we get here? We get 84,400. But 84,400 is not income. That is what? That is loss from house property. Because deductions are more than net annual value. If deductions are more than net annual value, we have to call it as what? Loss, not income. So it is what? It is loss. Loss from house property. Okay. Whenever they have loss, there is no tax for them. Here it is loss from house property, students. It is not income. It is loss from house property. Hope this is clear for everyone. Okay, so this is how we have to do solution for this question, and let me show once all. This is our question, students, and by looking into question we have taken some details in our solution. Solution starts from here onwards. We recorded everything here, all the details we took from the question, and then we recorded in format. This is a format that we have to draw and we have to follow as per Indian Income Tax Act 1961, and everything we recorded here. Next, a GAV calculation we did under this box in the working notes. So I will show that also. Okay, this is GAV calculation. Okay, so this is actually solution completely for this. Hope this is clear for everyone. If it is clear, we will move, but before that I will show solution clearly so you can see this. This is question mark. And this is our solution. Solution starts from here onwards. After this is a format that we have drawn and we calculated loss from house property. That is the answer here, loss from house property. So GAV calculation is done. Under this, you do have to do under this in the working notes, GAV calculation. So I will show that also. So this is calculation of GAV. This is how we did under 3 steps. Okay, so this is a solution of first question what actually I discussed in this class. Let us go to next question and let us discuss that. Yeah, this is the next one. Let me discuss this also now. So let me read the question. Mrs. Sandhya, Mrs. Sandhya, 45 years age. So Sandhya is our assessee, and what is the age of her? 45 years. Owns a house. 45 years age means she is a non-senior citizen. If any assessee is less than 60 years, we can call them as a non-senior. If anyone is in between 60 to 80 years age, we have to call them as a senior citizen. If anyone is above 80 years, we can call them as a super senior. But that non-senior, senior and super senior classification we require when we calculate tax liability. Here we are not going to calculate tax liability. We are going to calculate only income from house property. So we are not bothered about her age. Okay. So Mrs. Sandhya, 45 years age, owns a house. She is having one own house which was let out. So she is giving that house on rental basis. Okay. Whenever she let out any house, we can take it as that she is giving that house on rental basis. To whom? To Mrs. Devi. So Mrs. Devi is tenant, and she is collecting how much rent? On a rent of 10,000 per month. So 10,000 per month. For 1 month, how much Sandhya is collecting as rent from tenant? 10,000. That is known as actual rental value. But that should be taken for full 1 year, because we are going to calculate income from house property of full 1 year. How much she is collecting during the previous year, that we are calculating in the assessment year. So 10,000 per month, that is actual rental value. For 1 month they have given, we should take it for 1 year. Let us see whether she is collecting full rent or not. How much rent she collects, that should be taken. So 10,000 per month. Notice that. And let me read complete question, then we will go and record the information. Municipal value. Municipal value. Municipal value means MRV. Municipal rental value. So municipal rental value of it is 75,000. So here they did not mention whether municipal valuation is for 1 month or for 1 year. Then we can take it as that is for 1 year. Okay, whenever nothing is mentioned in the question whether it is for 1 month or 1 year, we can assume that it is for 1 year. So 75,000 is MRV. Okay, and next not 75,000 students, it is 1 lakh. Yeah, I missed it. It is 1 lakh, not 75,000. It is 1 lakh students. Municipal value of it is 1 lakh, not 75,000. So municipal rental value is how much? It is 1 lakh. You can see here. I just jump to other line. So you can see it is how much? It is 1 lakh. Municipal value MRV is 1 lakh. So that is for full 1 year. And fair rental value FRV. Fair rental value means FRV. Rent of similar house also is known as FRV. So FRV is how much? 1,10,000. Standard rent is 75,000. So all 4 details are available. MRV is available, FRV is available, SRV standard rental value is available, ARV actual rental value is available. 4 are available. So if standard rent is given, then while calculating GAV gross annual value, we need to take second step also. If standard rent is not given, we are not going to take second step, only first step and third step. But if standard rent is given in any question, we are going to do second step also in the calculation of gross annual value. Okay, so all 4 are given. Let me read complete question, then we will take all the details. Mrs. Devi did not pay the rent for July. So Devi, tenant, she did not pay July month rent. Okay, actually previous year starts from April 1st onwards, April 1st 2023. Okay, that is our previous year beginning day, beginning month. So she paid rent of April, May, June, July month rent she did not pay. So how many months rent she paid? Only 3 months rent she paid. Okay, so was made to vacate. So owner did not remain calm. Owner vacated her the house. So vacate on 31st July 2023. So at the end of the July month, she did not pay July month rent. On the ending day, she vacated the house. So full 1 month rent our owner did not receive. Okay, note this point. On 1st August, immediately next month opening day, she let out that house to Mrs. Shanti. She has given that house to Shanti. Okay, Shanti is a new tenant. First, that house was let out to Devi. Devi stayed for 4 months, April, May, June, July. But July month rent she did not pay. So only 3 months rent she paid, and she vacated the house. Okay, 1 month rent owner did not receive from Devi. Note that point. And next, immediately in the month of August, she has given that house on rental basis to Shanti on a monthly rent of 9,000. So 9,000. Okay, what is the 1 month rent? Again, she is collecting 9,000 for 1 month. And expenses incurred during the previous year are repairs. We don't need repairs. Municipal taxes we need. Okay, we give as deduction 15,000 rupees. Interest on loan also we need. We give as deduction under section 24B, that is 70,000. Okay, interest on loan is given. Municipal taxes are given in the question. They did not mention whether municipal taxes are due or paid. Then we will assume that it is paid off. Then we can give as deduction. If it is due, then we don't give as deduction. But here they did not mention anything, so we can assume that it is paid off. In case of interest on loan, whether it is due or paid, we can give as deduction. No issues. Calculate income from house property. So these are the details they actually have given in the question. We are going to calculate that. Let us go and first take the information from the question. Okay. So first she is giving to Devi actual rental value, ARV. ARV, actually owner is collecting actual rent from 2 tenants, not from 1 tenant. Okay, so how much she is collecting? Let us see that. Actual rental value, how much here? She is collecting from 2 persons. Okay, first she has given on rental basis to Devi. So Devi, how much she is paying here? She stayed for 4 months, but she did not pay July month rent. April, May, June, only 3 months rent she paid. How much actually our assessee is collecting from Devi, you can see here. So that house is given on rental basis to Devi for 10,000 per month. Okay, and she stayed in the house from April month onwards, but she did not pay July month rent. So April, May, June, 3 months rent she paid. July month rent she did not pay, she vacated the house. So our owner received only 3 months rent from her. How much for 1 month? 10,000 rupees. Let us take 10,000 rupees here. Okay, so 10,000 into 3 months is equal to, we will get 30,000. Okay, so this is what actually the rent that our assessee is receiving from tenant Devi. She stayed for 4 months. She did not pay July month rent. Only 3 months rent our assessee is receiving from her. And for 1 month 10,000, for 3 months 30,000 we recorded. And later on, immediately from August, the house was given on rental basis to another person. Her name is Shanti. How much actually our assessee is collecting from Shanti, you can see. I will show that. On 1st August, she let out to Mrs. Shanti on a monthly rent of 9,000. Okay. So what is the rent that our assessee is collecting from her? 9,000 per month. From which month onwards? From August 1st onwards. So full August month she stayed in the house. So August month we can take into account. From August our assessee is collecting rent from Shanti for 1 month 9,000 rupees. Let us go and record that. For 1 month it is 9,000 into how many months rent she received? August, September, October, November, December. December 2023. But our previous year ends on 31st March 2024. Okay, so we can calculate January, February, March. Total 8 months rent. 8 months rent our assessee is receiving from Shanti. Because our previous year is 1st April 2023 and ends on 31st March 2024. 12 months period. Out of the 12 months, first 4 months Devi stayed in the house, but she could not pay July month rent. Only 3 months rent received by assessee. Next, from August onwards, that house is given on rental basis to Shanti. So from August to till 31st March 2024. Okay, 8 months rent our assessee is receiving from Shanti. For 1 month it is 9,000. For 8 months how much? You can calculate that. 9,000 into 8. So it is 72,000. Our assessee is receiving 72,000 rent. From whom? From Shanti. Hope this is clear for everyone. Okay. Now what is the total rent that our assessee is collecting from these two persons during the previous year? From Devi she is receiving 30,000 and from Shanti she is receiving 72,000. Okay. So how much she is receiving actually from everyone? From two persons, from two, Devi and Shanti, how much she is receiving? You can add it. Okay, 30,000 plus 72,000. So how much she is receiving? 1,02,000. 1,02,000 is the rent that she is receiving from both the parties, both the tenants. Hope this is clear for everyone. Okay. So this is ARV students. What is this? This is ARV. Okay. ARV is how much? ARV is equal to 1,02,000. Hope this is clear for everyone. Next, after ARV we are going to take remaining values. So you see municipal value. Municipal value means MRV. MRV is how much? It is 1 lakh. Okay. So nothing is mentioned whether it is for 1 month or 1 year. We will take it as for 1 year. So let us take MRV. MRV is equal to 1 lakh. Next, fair rental value. Fair rental value is 1,10,000. Fair rental value means FRV. It is also known as rent of a similar house. If they give in the question that rent of a similar house, it is nothing but fair rental value. So we can take 1,10,000 fair rental value. FRV. FRV is equal to 1,10,000. Let us go to next one. Standard rent. Standard rent is how much? 75,000. So let us take standard rent 75,000 here. Standard rent means standard rental value. That is nothing but SRV. SRV is 75,000. Okay. So let us go to question again. What they have given here? They have given details regarding municipal taxes, expenses incurred during the previous year. Repairs we don't need in the solution. We can ignore that, and repairs we can ignore, we don't take anywhere. Okay. So what else are given in the question? Municipal taxes 15,000. We need that. we have to give as deduction from GAV. Okay, second item in our statement, that is municipal taxes. Next, interest on loan to construct the house is 70,000. That also we allow as deduction under section 24B. Let us take those two details here. Municipal taxes. Municipal taxes. How much municipal taxes? 15,000. Next, interest on loan. Under section 24 subsection B. Okay, is equal to interest on loan how much here? 70,000. So let us take that also. 70,000. Okay, so these are the details that are available in the question and we took here, and we need all these details in the solution also for calculation of income from house property. Let us go and record all these there. Let us go to our next part, that is calculation of income from house property. So here, what is our house? Our house is a let out house. We should mention on the top that our house is let out house. And we have to draw columns, particulars amount, and same format whatever I discussed in the previous live class, in the beginning of this class. This is a format and we should keep this format in our mind while calculating income from house property calculation. So here we have to take all the details one by one and we have to calculate income from house property. So on the top of this we should give heading. What heading? Computation of income from house property. So here we have to give a heading, computation of income from house property of Mr. Name of the person will be recorded there in the dash. Okay, so there after Mr. we have to mention the name of the person. Whatever name that is mentioned in our question, that assessee name should be taken here. Okay, so what is assessee name in our question? Assessee name is Mrs. Sandhya. So we are going to take Mrs. Sandhya there in our solution in the place of here. So we are going to calculate income from house property of Mrs. Sandhya. For the assessment year 2024 and 25. Our assessment year is 2024 and 25. We are calculating this house property for assessment year 2024 and 25. But we should calculate on the income which actually she received in the previous year. Okay. So now we calculate in the assessment year. So what is our assessment year 2024-25? This is a heading always we should write. And only name of the person is going to change everywhere. And what is the first item in the statement? We have to start with the gross annual value. So gross annual value means GAV. So GAV, they never given the question, we have to calculate. Students, remember GAV calculation sometimes they will ask in the question paper in the final examination for short also. So you have to follow 3 steps and you should calculate GAV. Sometimes you need 2 steps only, standard rate is not given. Okay, so gross annual value we have to calculate now. Let us go to our calculation part and let us calculate it. So that calculation part should be done under this statement. Let us go and record that. This is a calculation part. Calculation of GAV. So how we calculate GAV? By using 3 steps. Step 1. What is first step here? First step is higher of the following 2 is taken as ERV. Higher of the 2. Whatever are mentioned down under this in the first step, highest of the 2 we should take as ERV. ERV means expected rental value. So what are those 2 then? Let us take what are those 2. First one is municipal rental value. Short form of this is MRV. Okay, MRV. We should write in capital letters MRV. Okay, so full 1 year MRV we should take. Already we collected all the details from the question. Let us see what is our MRV. MRV is 1 lakh. Let us take in the place of MRV 1 lakh rupees. Let us go there and let us take it. MRV is 1 lakh. Okay. So what is our MRV? 1 lakh rupee. So here we have taken 1 lakh in the place of MRV, municipal rental value. And second one is FRV, fair rental value. Fair rental value is the second one, that is FRV. So let us write short form of that. What is this? FRV. Fair rental value means FRV. Already we took that also from the question and we recorded in the solution box. Let us see what it is. You can see here FRV. FRV is how much ma? 1,10,000. So you should take 1,10,000 in the place of FRV. Let us go and take 1,10,000 there. Okay, I took 1,10,000 here. Now you tell me, students, out of these two, which one we have to select? We should select the highest one out of the two and we should name it as ERV. ERV means expected rental value. So which one is highest? 1,10,000. Yeah. So one student have given the answer. Very good. So 1,10,000 is our expected rental value. And what you have to do in your notes is, in the examination or whenever you write in your notes, you have to circle around 1 lakh. 1,10,000. Okay. But here I am changing the color of that. You can't change the color. That is why you have to just circle it around 1,10,000. So here I am changing the color and I am naming it as what? Expected rental value. Means what? It is nothing but ERV. ERV, that is expected rental value. Okay. So how much it is? It is 1,10,000. Hope this is clear. In the first step we calculated ERV 1,10,000 finished. And we have to go to second step. So second step, actually we need only if standard rental value is given in the question. If standard rental value is not available in the question, don't go to second step. But in our problem, we have SRV, standard rental value. Standard rental value short form is SRV. If you have standard rental value in the question, we can go to second step. So at the time of discussing question, we have taken standard rental value because that is available in the question. So how much it is? It is 75,000. So SRV is 75,000. We took it already in the solution box, and now let us go and take SRV, standard rental value, in step 2 also. So let us go there. Okay, let us go to second step. Second step we will do only if standard rental value is available. We have standard rental value. Let us go and do second step. What is the second step here? Least of the following two is taken as adjusted ERV. So what is least of the following two? What are the least of the following two here? Least of the following two. How many are there? First one is expected rental value. See students, always in the second step, first item is answer of the step 1. In the third step, first item is answer of the step 2. Okay. Hope this is clear for everyone. So in step 2, first item always is answer of the first step. What is the answer in the first step? Expected rental value, ERV. So we will take that. Okay. So ERV, expected rental value, short form is ERV. How much that is? Here we calculated already. It is 1,10,000. So let us take 1,10,000 here. Next, second one is standard rental value. Standard rental value, short form is SRV. How much it is? You can see here, it is 75,000. Already I discussed with you, it is 75,000. Let us take 75,000 here. Okay. So out of these two, which one we have to select? We have to select least one. Okay, in the first step, third step, we select the highest one. But in second step, we select least one. Remember that point. So here we are going to select least one. So which is least one? 75,000. Yeah, very good. Somebody has given answer. Very good. So somebody has given lucky. Okay, very good. Here 75,000 we can select. I am changing the color of 75,000. Yes, SRV. Very good. So we selected SRV because that is least amount. So we can name it as adjusted ERV. Adjusted ERV is 75,000 because we selected least one. Second step also finished. So after completing second step, we will go to third step. What is the third step? Step 3. Higher of the following two is taken as GAV. So higher of the following two is taken as what? GAV, gross annual value. So what are those two here? First one is adjusted ERV. Adjusted ERV is the answer in the second step. That already we calculated. That is 75,000. And next one is actual rental value. Actual rental value, short form is ARV. So ARV means actual rental value, and already we calculated that also in the solution box. You can see that. I will show that actual rental value. So here we calculated that our assessee is giving on rental basis to two tenants. Okay, one is Devi, first one is Devi and second one is Shanti, and from Devi she is collecting first 3 months rent during the previous year, and in July month she vacated the house without paying rent, and in the month of August again she has given the house on rental basis to Shanti, and from August to till 31st March that house actually given for rent to Shanti for 8 months. That is 72,000. Okay, so total rent collected, actual rent collected from two tenants is 1,02,000. That is ARV. 1 month rent our assessee did not receive. We are not going to mention that because she did not receive. We are not going to take into account. Okay, hope that is clear. So 1,02,000 is our ARV. Let us go and record that. 1,02,000. So out of these two, which one we have to select? Already I mentioned on the top. Highest one, higher of the following two. Which one we are going to select? Higher. Okay, we are going to select higher of the following two. Okay, so here I am changing the color of that higher list so that you will understand in a better way. So higher of the following two we are going to select. Which is highest now out of these two? Whether 75,000 or 1,02,000? Obviously it is 1,02,000. Yeah, somebody has mentioned in the comment box. Very good. Yeah, ARV. Very good. ARV we are going to select it. That is 1,02,000. So you can select by drawing a circle around 1,02,000. But here I am changing the color of that. Okay, so we can name it as what? Gross annual value, GAV. That is a short form of gross annual value. Hope that is clear for everyone. That is how much? 1,02,000. So GAV is 1,02,000 students. Hope this is clear for everyone. Okay. So let us move to our statement and let us record gross annual value as 1,02,000. So here I came to our statement. In the place of gross annual value, we have to record 1,02,000. That's finished. We recorded 1,02,000. Next, less municipal taxes. Municipal taxes rule is if it is paid then only we give as deduction. If it is due, don't allow as deduction. But in our problem nothing is mentioned whether it is paid or due. Then we can assume that it is paid off. We can give as deduction. So how much it is? I will show that. Municipal taxes 15,000 are given. So 15,000 we are going to allow as deduction. Let us go and record there. 15,000. So here 15,000 we should deduct from 1,02,000 students. If we deduct we get one value. What is that value here? That we get 87,000. 87,000 we should record here. And we should name it as net annual value. We should give name for that. That is known as net annual value, and short form is NAV. Okay, what is the short form of net annual value? NAV. Okay, so we should name it as like that. So next, just we found out NAV. After that, we should allow deductions under section 24. Okay, so how many deductions are there? We have two deductions. One is standard deduction and the other one is interest on loan under section 24 subsection B. There are two deductions that we have to allow. First one is standard deduction. Standard deduction, other name is statutory deduction. Okay, both are one and the same. How much it is? As per our Indian Income Tax Act 1961, during present assessment year, that is 2024 and 25, it is 30% on NAV. We should calculate 30% on NAV. Whatever NAV we get here, on that 30% should be calculated. So what is our NAV? 87,000. On that we should calculate 30%. Let me calculate that. 87,000 into 30% means 30 by 100. Okay, how much we get? You can see 30 by 100. 26,100. We get 26,100. Okay, that is standard deduction. So we can write that 26,100 in the amount column. So here I am writing in the amount column 26,100. Hope that is clear for everyone. Next, let us move to next deduction, that is interest on loan under section 24B. So what is the rule for this interest on loan? Even it is due, we can allow as deduction. Even it is paid, we can allow as deduction. Penal interest we should not allow as deduction. Remember that point. So interest on loan, whether it is given in the question or not, that should be checked first. Let us go. Already we took details here. Okay, so interest on loan, how much? We have 70,000. Okay, so let us take 70,000 as interest on loan under section 24B. So we took that also. That is 70,000. So we have 70,000 and 26,100. Two deductions are available here. So we are going to deduct those two deductions from NAV. But if you see these two deductions total, 26,100 plus 70,000, the total is 96,100. So deductions total is 96,100 and NAV amount is 87,000. Okay, so NAV is less than our deductions. Then whatever answer we get, that is not income, that is loss from house property. Because from 87,000 if we deduct 96,100, we get a negative value. So negative means it is loss. Hope that is clear for everyone. Okay, so let me deduct it and let me record it. 96,100 minus 87,000. So 9,100. We get 9,100, students. Okay, 9,100. That is what? Is it income? No, it is not income. It is loss from house property because it is in negative amount. Deductions are more than our NAV. So here the amount whatever we are getting, 9,100, that is not income, that is loss. Let me change this answer. That is loss. Loss from house property. Okay. Loss from house property. This is our final answer. So this is how we are going to calculate income from house property of assessee in case of let out houses. So if you observe here, today we discussed in our live class two problems. In these two problems, the assessee is not paying 1 month rent. Assessee is not receiving 1 month rent. Okay, so 1 month or 2 months, if any unrealized rent is given in any question, how to deal with that? That we actually understood in these problems. Okay, here in these two problems we focused on unrealized rent. Assessee is not receiving some months rent, few months rent. It may be 1 month, 2 months rent. But in our problems, we actually came across with 1 month rent only. Assessee could not receive 1 month rent from the tenant. Okay. So whenever assessee is not receiving any rent, it is treated as unrealized rent. Whenever unrealized rent is there in any question, so we are going to do problem how in this way, how we discussed today. Okay, so ARV, we are going to calculate ARV for the months, for how many months assessee is receiving. We are going to take for that many months only, and we are going to follow same procedure. Hope this is clear for everyone. Let me show second solution, first solution completely. First let me show second solution, then we will go to first and second again. Okay, so this is a second question that I discussed with you. Okay, today I discussed, this is the second one. First one already I have shown completely. This is the second question that I discussed with you. So by this, first of all, understanding question is very, very important. So after this, we took some details from the question. Okay, so here in solution box, solution starts from here only. We have to take all the details whatever are given from the question, and what we require, that should be taken from the question. So we took all this. Next, we did income from house property calculation in the format. So we took all the details and we have given heading. We entered all the details, okay, in a proper manner by using all rules and regulations to calculate income from house property. Next, calculation of GAV. So calculation of GAV should be done under the format. Okay, this is how we calculated GAV. Okay, I will show from first question that what actually I discussed in live class today, so that it will become easy for you to copy. So question and solution I will show one by one. This is the first one that I discussed today in live class. In the previous first live class related to income from house property, I discussed 3 problems and its solutions. Here I discussed 2 problems today in live class. This is the first one that I discussed today. So this is a solution part for that. And this is a format. And we recorded all the details here and we found out income from house property, but in this problem we did not get income. We actually ascertained loss from house property. Assessee did not get any income, loss. Okay. So next, calculation of GAV. This is the calculation of GAV part for first solution, for first problem what I discussed today in live class. Hope this is clear. If you understand all the solutions and my explanation, you like the video, share it and subscribe the channel, students. And tomorrow also we will have a live class. And I discuss some more problems related to income from house property. And this is the second one I discussed with you, already I have shown this. And this is a solution box for second problem. And this is calculation of GAV. Hope everyone understood the class. If you understand the class, whatever I discussed with you, like the video, share it and subscribe the channel. Tomorrow we will meet again in live class, same time. Okay? So bye everyone.